I welcome you to our today's training, which is brought by ReFX Academy. So your mentor, my name is Rimashewe. So I'll be the one taking you into our today's training. I'll be the one taking you into our today's training. So today, in our today's training, or into our today's course, we are going to look at the subtitle or the course title entitled, How to Trade. How to trade. It is very, very important that you need to know how to trade. How to trade. This is what we are going to discuss. How to trade. How to trade. How do you trade? How do you trade? Okay. So now let us go further so that we discover how to trade. Now, before trading, always remember to ask these questions. We are learning on how to trade. Now, before you enter into a trade, always it is a must. It is not an option. It is a standard. Always remember to ask yourselves these questions. It is like before you eat, always wash your hands. It simply means that it should be in your head that before it should be in your mind that if I want to eat, I must wash my hands. So it applies with the issue of how to trade. This is what we are looking at. So once immediately you join, make sure that you put your mic off, or let me just make sure I close so that no one is able. Oh, sorry, Tim. So I did not know that people were not able to get my. I'm using two devices. There is a laptop. There's also a phone. So not knowing that my phone was also off. So let me try to repeat what I was saying. Okay. So let me repeat what I was saying. So before trading, always remember to ask yourself these questions. Always remember. So it simply means that it is a must. It is not an option. It is a must that before you trade, these questions you must ask yourself before you enter a trade. It is like before you eat anything, you must always ask yourself, or you must bear in mind, you say, have I washed my hands? Then you must wash your hands, then that is when you can eat. So this is what it applies here. Before you enter a trade or before you begin trading, it is before, not after. Always remember to ask yourself these questions. We are looking at how to trade. So this is how you should trade. Okay, a lot of people have asked, how should I trade? So these are the steps for you to trade. Number one, you need to ask yourself, the first question is, what market to trade? What market to trade? You must ask yourself, what market to trade? So by a market, it simply means what pair do you want to trade? What pair, what kind of a pair do you want to trade? Is it cryptocurrency pair? Is it currencies pairs? And among those currency pairs, which pair do you want to trade? Is it indices? Which one do you want to go for? Do you want to trade the Boom 500? Do you want to trade V75? Do you want to trade V50? Do you want to trade Boom 1000, Crash 1000? So know the market you want to trade. After knowing the market that you want to trade, you go to the market, you press, is it V50? Is it V100? You go to V100. You press on there. Now, after pressing on that market, the second question, what direction do I trade? What direction now? You start analyzing, which direction do I trade? Is it, do you want to go in as a buy or do you want to go in as a sell? There are only two options. Either you buy or you sell. You have selected the market that you want to trade. Now you begin to analyze, which direction should I go to? Do I go in as a sell, or do I go in as a buy, or as a buyer, or as a seller? Do I press in buy or do I press in sell? Okay. Now after that, you ask yourself another question: when do I get in? Okay, you have discovered now. Okay, I want to go in as a sell. I want to sell, or I want to go in with a buy order or a sell order. Now, after establishing that, the third question that you ask yourself, when to get in now? At which point should I get in? This is where now you need to know about a setup. You need to know about a setup. You need to know about a setup. Are you looking for a breakout setup? Are you looking for a bounce? Are you looking for a reversal? Are you looking at support and resistance? Are you looking at candlestick patterns? For those who are new, don't worry about those. You get to understand those words as time goes by. For now, just know that there are those kind of words in the Forex market. Now, after establishing when to get in, it simply means you know your entry point. Now, apart from that, you must also establish when to get out. You need to know where your take profit is. You need also to know where your stop loss is. So it simply means if the market goes with your direction, where do you, because the market it is always there. And if you are scalping, you need to know when to end, where you enter and when to cross. So you need to know your take profit. It is where you cross in profit. Your stop loss, it is where you cross in loss if it goes against you. That is where you need to ask yourself when to get out. You don't just enter and start saying like that, you forget. No, you don't do like that. Even when it comes to eating food, you must know to say, pamanje, ninjikuta na kuta, I'm satisfied. You need to know when to begin to eat and when to stop eating. So it is applied. So it will also help you to overcome greedy. and overtrading. Okay. Now, apart from that, you need also to know the trade size. The trade size, this is where now we begin to look at risk management. The trade size, you also look at the lot size. Is it 0.20? Is it 0.01? Is it 0.02? Is it 0.03? You don't just enter boom, with the lot size. You just guess. No, you must know that. This is before, I repeat, this is before you enter. Before you enter, you must have this in mind. This is what is called as trading plan. You plan in advance before you enter. If what I've said, it is making sense before I move to the next point, can I see some 555 in the chat box? 5 in the chat box. If what I've said so far, it is making sense, you have gotten what I've said, can I see some 55 in the chat box? 55 in the chat box, 5 in the chat box. Now, let us go further. Forex trading steps. Forex trading steps. Forex trading steps. Now, these are steps. These are steps that you must, these are steps that you need to consider. Okay? Remember, like we have said, we are learning, we are looking at how to trade. You have been seen how to trade. This is what we are looking at. Now, we are now looking at the Forex trading steps. The Forex trading steps are simple on paper and follow the same patterns as outlined below. Okay? It may seem like an easy process, but it is far from it. So the way I've just listed these steps, it may seem so simple by looking at these steps, but it requires you to pay very much attention. It requires you to have it requires you to have discipline. It requires you to have focus. Let us begin. Step 1, choose a currency pair to trade. Once you choose a currency pair to trade, we have looked at that. Traders should choose one that suits their trading strategy or style. So the pair that you are choosing, it is very important that you need to know to say, okay, if my trading style, if my trading style is maybe I'm scalping, okay, which pair should I go? Which is good for scalping? Okay, if I'm trading, I'm going in as I'm holding a position. Which pair should I go? Which is good for me? Okay, if I don't want to waste the time, should I go in as trading against the strikes, or I catch the strikes? You need to know that. You need also to know that if you are afraid of strikes, I'm using strikes because a lot of us will trade boom and clash, but you can use the same principle in all other pairs. If you know to say, me, I fear strikes, I can't hold you. When I enter a trade, I'm just seeing red, negative red. I end up crossing a trade prematurely because of fear. So if you know that you have fear, it simply means you change. You go in, instead of catching the strikes, you go in as a normal trade. You go against the strikes, so that once you open, you are seeing blue. You can use that. We are talking about choose one pair. Should you choose one trading strategy, okay? One trading strategy for that particular. And I also recommend at least don't choose a lot of pairs that is at a go. Choose one strategy for that particular pair so that once you enter, it will be easy for you. Number 2, decide whether to buy or to sell. You must decide whether to buy or to sell. Very important. You must decide whether to buy or to sell. Okay? Don't gamble. There are people who gamble, who do gambling, and they will call it a strategy. They will open, buy, and sell at the same time. Buy, so even you need to choose between buy and sell. You need to know when to buy and you need to know when to sell. Okay? Okay, so now after you analyze the market, you should come up with the outline, the trade direction. You analyze the market, you need to know, okay, I'll go in, I'll follow a trend. Okay, I'm waiting for, maybe if it is ranging, I'll wait for a breakout. That is when I'll enter. So you need to look at a direction, but I always recommend to say a trend is your friend unless it bends. So it is important you go in for a trend. Okay, for those who don't know what is a trend, it is a market or a price with a specific direction. You can simply tell where the market is going. You can tell to say this is a downtrend, this is going down, this is a bullish market, this is a bearish market. For if you are new, you get to understand this. Just go back in course 1. We'll talk about the introduction to Forex. You get to understand the language which I'm talking about, which is used in the Forex. What is a bullish market? What is a bearish market? A trend, uptrend, downtrend, all these. Okay, we go to the third step. Set your stops and limits. Set your stops and limits. It is very important. You must technically, you need to know your risky reward ratio. This will help you. You need to know, you don't just risk now. A lot of us, we just, for you to, if you look at a market, you don't just enter. For you to open 5 positions of 0.50, 0.50, it does not just come. It simply means that you have looked at the risk reward ratio. If you see that there's a potential of, there's a 90% of a good profit, you know to say, on this trade, I can enter with, I can open with 0.053 position. Because you are sure, you have seen the possibility. Because that risk, it has got reward. No wonder it's called the risk reward ratio. But if you see that it is not certain, you open with small lot size so that in case it goes against you, it does not take you by surprise. If what I'm saying so far is making sense, can I have some 7777 in the chat box? 777 in the chat box before I go to the next point. If it is making sense what I'm saying, 7 in the chat box, 7 in the chat box, 7 in the chat box. So these are the steps that we are looking at on how to trade. So you have been asking how to trade. These are the steps. These are the steps. If it's making sense, 7 in the chat box. Now, we move to the point 4, number 4. Open your first trade. You need to open your first trade. Now, what do? You need to have a trading account for it. A trading account for it. Do you start with a $10? Do you start with $100? Do you start with a $50? I recommend that you at least start with $100. It is very hard to blow a $100 account with a skill. $10, $20, those $10, $100, these are, you'll be trading with fear. You'll be trading with fear. You'll be trading with fear. You'll not be comfortable. So deposit an amount that can help you to trade $100 when you open with 0.020, one position with $100. You can be at ease. And if it goes against you, it gives you -10. You still have a 90 as a free margin. So you'll not be afraid. But if you have a $20, if it goes against you, you are in -10. It simply means that your free margin level, it will be -10. You'll be afraid. So I highly recommend at least $100 if possible. $100, you start with it. This is business, by the way. It is not a game. This business. So if you are entering into business, fund serious money. So at least 100. If you have money, 1,000 and above. If you have muscle, 1,000 and above. Okay. Then let us move to another point. monitor your position. You can monitor your position. If you are scalping, you can monitor your position, because sometimes the market can change direction. Because the market, you can't predict very well. You can see, but from nowhere it can change. No wonder you see, even when I'm giving signals, I can simply tell you to say, once it changes, I'll tell you to cross, enter this position, because it changes. So you begin to monitor the market. Okay? You begin to monitor the market so that in case it does the change, you are able to change the direction. If you can't beat them, join them. You hear me when you get to understand that as we go there. But the most important is monitor your position, especially if you are a newbie. But there's also another setup called the set and forget, where you just open a trade, you put your take profit and your stop loss, you forget about it. But this is where you are just, if you want to analyze, if you want to be changing a position, say, okay, this is, I can change, I can do that. So that is point 5, monitor your position. Point 6, close your trade and take your profit or loss. If you make your profit, close and take your profit. Greedy queues. Most of us, you have made, some of us, you have made, you are targeting a M5. From M5, you have made $20. Instead of you crossing or locking your profit, you are still leaving it until you lose. It goes, it does the reverse. So it goes, you are negative. The all $20, you are just watching it reducing up to negative. What else you are scalping? Now, what will come is that you want to revenge the market. The market does not know you. The market does no feelings. It does not know that the money that you have deposited, it is, you want to. So are you able to see the screen? Are you able to see the screen? So there's a little bit of network. So my laptop has just gone out. Okay, for the sake of let me continue. Once the network is okay with the laptop, I'll share the screen. But please, can you just hear what I'm saying? So we are on 6. Close your trade and take your profit or your loss. It is very important. Set your take profit and your stop loss. Once you hit that cross, don't be moving a stop loss. Some of us will make a mistake to say, because you see that it is still steady, then you increase your stop loss. I mean your take profit. It is important that once you hit your take profit, you cross, so that you freshen up, you wait for another opportunity. You freshen up, you wait for another opportunity. You can either close manually, or you can set your take profit or your stop loss orders to handle it. If you want, you can just you can not put your take profit, your stop loss. You can just put you can just put the take profit or your stop loss, so that in case you are busy, you are able to. In case you are busy, you are able to join. Okay. In case you are busy, you are able to. I mean, to cross the system is able to cross a trade. So I'm trying to log in. So no wonder you are seeing me missing some. I'm trying to log in once more so that you are able to see the screen. So that you are able to see the screen. So just a minute, just a minute. It is easy if you follow, if you are seeing what I'm showing, it becomes easy. The network is performing. Okay, team. For the sake of time, we are on number 6. Okay, you can either close manually, or you can set your take profit or stop loss, and the system will handle that. It will cross for you. Now we come to another important point. When it comes to trading, you must identify the market structure. You must be able to identify the market structure or the market pattern. And these are the things that you must be able to identify. You need to identify the market structure. When you look at a structure, is it a trend? So there are two types. It forms in two types. There's a trend, there's a lunging. So lunging, it is in two types. There is uptrend or downtrend. So a trend, it simply means it is a market with direction or specific direction. So you can tell to say this market is going up. The sellers, the buyers are in control. Or this market is a downtrend, or it is trending down. It is a bullish market. So you can tell. So you must be able to identify the market structure. Is it a downtrend or is it an uptrend? Is it ranging? So when the market is ranging, simply means the market, there's no specific direction. Both buyers and sellers are in control. But when it is a trend, when it is trending, either an uptrend or a downtrend, if it is an uptrend, it simply means buyers, they are in control. They have buyers, they have more power than sellers. If it is a downtrend, it simply means sellers, they have more power than buyers. So these are things that you need to bear in mind if you want to trade. So how to trade? This is what we discovered today on how to trade, on how to trade. Very important. On how to trade. So this is where we end in our today's section. My name is Limashebe, your mentor. Let us meet in a next course. Bye-bye and God bless.